So welcome to today's Wicked Lunch, which is all about blockchain in financial services. This is an event associated with the UKFin network, which is sponsored by the Engineering and Physical Sciences Research Council. UKFin exists to take a look at some of the real-life challenges facing the financial services industry. So you can see here we deal with everything from financial inclusion and well-being to resilience and stability to the focus of today's event, which is of course coping with game-changing technologies. And the purpose of the network is to encourage collaborations between our academic and non-academic partners to tackle some of these persistent challenges. And if you'd like a detailed overview of all the different research and application areas that we look at, please see the ukfin.network website, where you can also, under the About section, you'll find the research agenda. So what we do at UKFin is that we have our so-called spotlights, where we look at a different slice of this problem pie. And currently we're having a look at the game-changing technologies, particularly AI, quantum, and blockchain or distributed ledger technology or decentralized finance, whatever you want to call it. And we've had events on both the AI and quantum computing. And so today's event is all about blockchain, distributed ledger technology, decentralized finance. This is a graphic that the artist Jenny Leonard drew during the launch of our research agenda, and you can see that we will mostly be dealing with what you can see here on the sort of the right-hand side of the landscape of game-changing technology. So everything about blockchain, sandboxes, trust, data sharing, and so on. So I'm very pleased to welcome our panel today. So we've got Pinar Emirdag, who is a financial markets innovator and business leader. She's built and led several innovative businesses, services, and digital platforms in financial institutions and also in startups. And she's had roles in product and business development, strategic investments, technology, and so on. So she really has an amazing perspective on today's topic. And she's also one of our advisory board members at UKFin. And then we have Ian Taylor, who's the founder and CEO of SIMBA Chain. And Ian was previously a full research professor at the University of, is it Notre Dame or Notre Dame? and he then incubated out of that university SIMBA, and he's also was a full professor at Cardiff University, where he currently is an honorary professor. And last but not least, we have Maciej Zurawski, who's the executive director of Bloackchain Scotland, which is Scotland's leading premier body for commercial blockchain adoption. And he really is a respected thought leader in the blockchain space, and he brings valuable insights to topics such as enterprise blockchain solutions, AI applications, and decentralized finance. So welcome to you all, right? I guess just to start with, given that some of the audience may not be that specialized in terms of their expertise when it comes to blockchain and distributed ledger technology, which our panel wants to start by just highlighting the promise of blockchain and distributed ledger technology and what it can bring to financial services. In particular, how is using a service based on the blockchain or distributed ledger different from just using, say, financial services through a traditional player like a bank?
Okay, should I volunteer, maybe? So using a blockchain financial bank app, one difference, actually settling is global. It's actually not constrained to a country. So those decentralized blockchain applications that can be used by someone anywhere in the world, and there are more than 400 million blockchain users. So I don't think, oh, I'm going to make something just for my nation or my country. Then basically, it works across cultures, legal systems, and continents. So that's one way to think about it. And the other thing is that it's also permissionless in the sense that the user directly basically owns and controls the money. It's not mediated by like a bank, for example, but they have direct ownership. Anyway, and then there are lots of exciting nations that works within the nation state. We can talk about that later.
Yeah. Sorry, Maciej, I don't know. The sound quality was a bit difficult there. Have you haven't got your volume up as you speak, do you? Because there's a bit of an echo.
It's also quite distorted, right? So might be the headphones.
Yeah, I'm not sure if the headphones are working properly.
I can maybe jump in and talk to this while Maciej is sorting his headphones out. So
sure.
yeah, so I mean, one of the key differences, just taking a step back between blockchain and typical financial services, is the nature of decentralization. So on a centralized system like we have today in finance, everything has to go through a kind of golden ledger, if you like, which keeps track of all of the transactions. That could be a bank, but it's very much centralized. And to change anything within that ledger, you have to interact with that bank and ask them to change those transactions. Otherwise, they have the source of truth. In a DLT, a DLT is kind of a higher level than blockchain. That is basically distributed. It's ledger, and the technology piece is the consensus protocol that harmonizes all the transactions. A blockchain is a very opinionated version of a DLT. So a blockchain basically has a copy on every node. So it's distributed throughout the whole network. You've got a copy on all of the nodes, and they use a consensus protocol to basically make sure those are intact. So for financial services, one of the kind of promises is that you can transact on a blockchain and everything is transparent and everybody can see it. And you also solve the issue of double payments and things like that. On the downside of blockchain, you have multiple issues, like onboarding is a very difficult issue. My mum would never use a wallet and know about asymmetric crypto system. So those are some of the challenges that need to be overcome.
Yeah, great, thanks. Yeah, I suppose undoing mistakes is also a difficult problem in a blockchain or distributed ledger, right?
Can I offer maybe just another perspective also? I mean, it's combination of this. I think we can have we can write a whole list about the promises. But I mean, maybe another perspective is this is really the next generation of financial services, which really turns the way that things work inside out. So you have from a user perspective and user perspective, you have the opportunity to really access the products more on demand, create new products, for example, launch them, create market structures around it, and do that in a way that is actually compliant and risk managed. So you need a platform business model ultimately of some sort. So it's a bit abstract, but I see it as a way that to think about in a toolkit which will enable financial services which fits today's demands, not only from technology perspective, but also from the user societal perspective as well. So it is not just basically, a company just creating a product and then launching it, and everybody has to go and invest in that or buy that specific instrument. You can actually create a bunch of things that are actually very innovative, but yet on a platform, so that they are not in islands. So it's but to me, it's I mean, the benefits are more for the users. And I do think, actually, frankly, it also comes at a time that we really need it. I mean, like that there was broader changes going on in our businesses, in our society, and demands. So I would argue some of the concepts, for example, of blockchain, if it existed 20 years ago, we might not have reacted the same way. We just basically some technologies would have implemented as databases, and that would be maybe, at least partially, that would be it. I'm not suggesting that it's a database, but I think the imagination, I think that it captures today is also a function of broader trends as well.
Yeah, well, a blockchain is a kind of database, and it stores transactions just in an immutable way, and in a decentralized way. So no one kind of node is controlled. Now, Maciej, you've just visited ETH Denver, right? Which is one of the top conferences in the decentralized finance space. So what is the latest news there from the front lines?
Mm-hmm. Yeah, so basically, I hope you can hear me now. I've changed.
It's much better. You no longer sound like you're in the International Space Station. Thank you so much.
Amazing, great. Actually, basically, so historically, this conference was for people more like hackers, developers building just like decentralized applications. But basically now it has become like 20,000 people, and now actually it's also about integration with AI. That's a big team this year. Things like decentralizing computations, like using AI, and also AI agents. How do you have autonomous things? Basically, we do transaction on our behalf on the blockchain. For example, like you have agents that can do trading on the blockchain on your behalf while sleeping. And then I guess a trend is that actually now there are also like basically regulated companies there, and those, for example, we had an XRP, Ripple, Hedera. There were some basically companies there which basically take these disruption innovations and say, oh, how can we package this, make it civilized, make it like legal, like regulated, and it's like so it can be part basically of the normal established financial system. So it's a fascinating place to see both those like hackers, disruptors, and people say, oh, well, let's package this and make it so it like fits into our UK like legal system. And they will have it like name things, call things, how it's like integrated. So, but yeah, I would say like the intersection of AI and blockchain is like yeah, that was one of the big themes, because in a way, blockchain itself, it is about sovereignty. Like every participant is sovereign. It's not confined by a nation. And the AI takes the sovereignty to the next level. It's like, because we don't only use us as individuals, but then they can delegate to the AI to things on our behalf. So I think basically the combination of the two makes things even more disruptive, I would say.
Yeah, really interesting. And actually, one of our next events on the 26th of March that we're hosting in Imperial is all going to be about the convergence of these emerging technologies, including, for example, AI and blockchain. So great to know that we are right on trend. I mean, just thinking more broadly, like where are we with the adoption of blockchain in real financial services? I mean, if I remember correctly, some years ago, people were very enthusiastic about, for example, stock exchanges like the Australian Stock Exchange moving onto a blockchain platform, right? And this was going to change everything. And then what actually happened is that a couple of years ago, the Australian Stock Exchange quietly abandoned that plan. So it was a bit more complex, and there were a few more challenges around scalability than they had thought, and so they sort of quietly abandoned it. So I mean, are we back in the prototyping phase, or do we have some really good examples of companies that are making an impact in real financial services with blockchain or distributed ledger technology?
Maybe just a brief one, and then I will let others talk about this one. But I mean, I think we are in. I mean, we did go through a lot of POC prototyping phase, which was a pretty, frankly, slow for many people. I think there are now real examples of companies that are emerging. So like one of the example is, for example, is Finality in the UK. It is a on-chain digital cash payment platform. It's a payment platform. It happens to be it happens to actually host a digital cash on chain, and it has some interesting properties. This cash, it is a central bank one-to-one backed cash, one type of money. The thing that it is actually solving, again, it requires some foresight, but this future that we talked about, where you actually have these platforms, their own chain, and it becomes very obvious that cash on ledger is going to be important. So a bunch of banks started working on creating this kind of cash on ledger, and it is now live. It is a regulated financial market infrastructure, FMI, in the UK. It's a payment system, and it's open for business. So that is one live example. I do think the phase that one more maybe note on this where we are. We went through this phase of everybody looking at either like too big ambitions about efficiencies, or like tokenizing certain things, just tokenizing this and this. But the market structure really requires an end-to-end picture. I think now what we are seeing is this is becoming very obvious. So now people are not working on tokenizing assets, but also trading them, distributing them to the buy-side clients, and which is, so you do have more kind of critical market structure type of initiatives that people are genuinely working on building. These things, they do take time to connect that. This is more in the traditional finance side. And I think in the, frankly, in the more the innovator side, Web3 crypto side, let's say, there's a lot of initiatives that are emerging. So I will just leave it there, and they are pretty real. They are real production cases. Yeah.
I would echo. Oh, sorry.
Yeah. Actually, you can go first. Go first.
So yeah, I would echo that. I think one of the I was just looking at Finality, and they're using a private Ethereum instance. So one of the issues is how public do these chains want to be? That's a recurring theme. I live in the US now. The idea of having all of your finances on chain for everybody to see forever is not a great concept. So I guess they use the private chain for that. The other issue I think is there's two things. Maybe first, the progression, right? So blockchain back in 2017, yes, everything was about tokenization. It was all about blockchain, and everything being about blockchain is not the right way of looking at it. A blockchain is a piece of this puzzle. It isn't the whole puzzle. So you have to integrate with other technologies. We integrate kind of with off-chain data and secure that on-chain as an example. The use of AI is an interesting one. I don't know how hallucinations fit in with automated trading, but we'll see what happens there. But yeah, I think there's a general progression, I think, of technology, the technology stack of which blockchain is a part of. And then, where we are today, I think, is a combination of those things. So that integrated solution brings about more realistic solutions in this space. So it's a good time from that perspective, I think.
Yeah. If you're looking for UK examples, I guess another famous one is GreenGage here in the UK. This is like tokenizing SME lending, and actually, for example, you can use collateral from the blockchain to get a loan as a business in UK, like in the normal financial system. That's a fascinating example and extremely useful. But so of course the word expression financial services, maybe this implies things which are regulated in a nation state. So in the UK, then in that sense, we only have very few things. But if we think widely as well, a financial functionality, like in a decentralized sense, and then there are like hundreds, thousands of applications which are accessible on the blockchain directly, and and there are 400 million blockchain users. So if someone makes like a decentralized application, they can be used by those 400 million users around the world, and only a tiny bit of those are unfortunately in the UK. Whereas, for example, in the Asia, Middle East, Latin America, many of those users, even Africa, many of those users there. For example, in Africa, there are 30% more blockchain users than in Europe. So in a way, Africa is ahead of Europe in the use of some of these decentralized applications, whereas here in the UK, I think we value things which are more regulated.
Yeah, I mean, we used to have some rather interesting decentralized apps, didn't we? For example, there was a flight delay insurance app where you could buy yourself insurance on your flight being delayed by more than a certain amount, right? And then I don't know what happened to that. It sort of seemed to quietly disappear from the scene. But just to pick up on something that Pinar hinted at, right? There is this kind of there's always been this divide between traditional finance, which puts a lot of store on regulation and has an orientation towards centralized services, generally speaking, and the sort of the Web3 crypto kind of developers and innovators who have a much broader kind of viewpoint that doesn't really necessarily respect particular jurisdictions to the same extent, or place the same kind of emphasis on the need for everything to be properly regulated. So how do we bring these two communities together? I mean, I think we're starting to see it happen, right? But what are some of the challenges around making that happen?
Yeah, I mean, shall I just take a step at that? I mean, there are many challenges and opportunities as well. And first of all, I think what we really need to think about, for me, I don't think of traditional finance or Web3 as two different, paths that will evolve separately. I mean, the worldview should be that it is financial services. I mean, as in, we can define it to be, it may look very different from what it looks like today, but it is financial services, which has a role in the society to, enable people to borrow land and invest and store money and so forth, right? There are a bunch of things around that one. So that means that I think the combination has to be the word that we imagine. And the challenges that we seem to have is one side actually just historically really grew as a more of a centralized, as you said, and siloed way of thinking, and everything is more, opaque, high margins, and so forth, especially in the institutional space. And the other side is much more like, let's think about how do we actually really think about these platform business models. And so you have cultural differences, you have differences about, I mean, there's a challenge, for example, the traditional finance has, which is, it is regulated and there is a business to run every day. And then you're really trying to really innovate in an environment where you are also trying to make sure that you run a business and then have some kind of budget and focus on how do you actually build the future in the meantime. So that is, it's not an easy thing to do. And in fact, especially, it's not easy thing to do, especially considering, and this is maybe for the researchers and thinking about, like, how do we actually really even think about the new first principles levers of finance, like how do we actually even think about the financial services at the most fundamental way. So you're trying to kind of create efficiencies, build new business models, and here you are on the other side, the challenges that the innovators have. They can just build very quick and very innovative. I mean, like every time I see a project that seems to be quite interesting, I feel like, how can we extend it to the entire financial services? I mean, I can't stop myself from thinking that way. So, but they are very niche today, and in the grand scheme of things. So how do you use the distribution power of traditional finance to distribute these innovative, opportunities, and other way around? How do you then bring more innovation to the traditional finance, fast? So.
Yeah, I mean, one of the big opportunities people talk about, isn't it, is tokenizing of real world assets, right? I mean, who wants to have a go at explaining what that actually means and maybe give an example or two of how that actually happens?
Okay. Anyways, anyone want to go first?
No, go for it, Maciej.
Yeah, go for it.
Okay, I can just focus on the technical economic side. If someone wants to say more about the legal framework, I'm not a legal expert, so I can't say more about that. I mean, you have a physical assets. It could be a house, a boat, a domain name, financial instrument, or money on your account or a loan, and basically, then basically say, okay, now we want to take this artifact and make it basically make it represent on the blockchain. So then you have a custodian. A custodian is the link between a legal framework, a country that has an asset, and its representation on the blockchain. And so from an economic point of view, quite often the motivation is that this asset might be like, I don't know, like liquidity if it's just confined as nation state, or that might be like an unproductive asset, doesn't create like a yield. But once especially has been moved to its custodian and then it moves its value to the blockchain, then suddenly start generating yield. And this is one of the commercial driver. Anyway, I mean, maybe someone wants to add.
I think that was a magnificent explanation. That's one of the best explanations of tokenization I've heard. Ian, do you have something to add?
Well, I guess two things. First, regulation. Regulation is different in every country. The US has not got its act together. It's maybe starting to make inroads into that, but it really the SEC hasn't really kind of given us much idea on the path forward yet. So that's a big problem about doing any of this, and that's probably the biggest problem at the moment. The other thing to say is, okay, an asset, a digital asset is a token on chain, but that's the piece of the iceberg that is outside the water. The rest of the technology stack to make that happen has to be able to interface that with real world things like legal documents, things surrounding the asset. Like if you, in the UK, as I remember, it might be very different now. I used to be able to buy a house very quickly and there was not much paperwork involved. I think that changed recently, according to some of my family members, what they've said. But in the US, you literally have 200 pages of documents that you need to sign. They are waivers. They are all kinds of things surrounding the transfer of that asset. From one person to the other. So it's not just the token that represents it, it's all of the data that needs to kind of tie into that asset in a way that you are certain that it represents that asset and other data hasn't filtered into the system. So I think that's one of the key things there.
Yeah, thanks, Ian. I can assure you that in the UK, buying property and so on is still a laborious and long-winded process, especially if it's, for example, like leasehold or shared ownership or something like that. So how are we doing in the UK with regard to making progress towards tokenizing some real-world assets? I mean, is any framework in place to help this proceed a little bit more swiftly or anything like that?
So maybe I just continue with that one. I mean, the legal framework, I mean, we can do anything with technology, right? I mean, we can argue that we can just design this and tokenize left, right, center, but without the framework, as Ian and Maciej mentioned, like it won't really happen. So what we and also remember the systems that we operate in today actually took a long time to create the legal and compliance and regulatory framework. So, we are now looking at all the same regulations and trying to adjust them with this new paradigm. So one of the things that we are doing in the UK, it's not, I am not doing it, but in the UK, Bank of England and FCA got together to launch something called Digital Securities Sandbox. It's an actually interesting one. I mean, frankly, for market structured geeks like me, it's a very interesting design because what they are doing is they are creating a sandbox for regulated or to be regulated firms, startups only. So as a technology company, you don't really go and apply for this sandbox. You really need to, aim to be regulated in the securities ecosystem in settlements, in functions, at the operational market structure functions, to actually work with the trading firm. So that is that's the format. So if you, for example, there is a company which is building a digital CSD, central depository, and in the UK. So people like that actually are very great candidates for the sandbox to actually go build the technology, but move afterwards to become a regulated company under Bank of England's jurisdiction. So that is actually pretty practical and interesting. It's real. It's not just a test. So I do welcome those kind of things. And in addition, there are a lot of interesting projects that are going on, whether it is tokenizing real estate, looking at, again, for example, investment association, the buy-side association, which I think is critical, is pretty active in thinking about blockchain. How do you actually, what do you do with these tokenized assets? So I would really encourage the researchers and to look into this space, because the environment is being built. Yeah.
Can I just add a point? I was going to say about regulation. Actually, so financial service within a nation state and in a decentralized fashion way have two different ways to give the peace of mind, basically, like to protect consumers. So when you talk about financial service, let's say that's regulated, you can say that the regulatory framework provides a peace of mind that if the company breaks in it, then there will be some kind of like action and it might be closed down if they don't follow it. So that's like one method to enforce order, peace of mind. But like a decentralized blockchain product, that's like it's called DApp. For example, you get like interest directly from a blockchain. There's a different method, and that method is basically like it's just the mathematics or the cryptography that gives you peace of mind. So like example, Aave, for example, is like a bank which operates. I was just checking; they have $28 billion, and like people lock in their money there, and they give interest, but they're not regulated. So they're like, oh, is this dangerous? But the question is like, no, actually, it's the mathematics and cryptography that gives the peace of mind, and because everything is open source, and you basically interact with a smart contract, the smart contract can't actually take your money and run away. You see what's going to happen. So I'm just saying these are the two ways to give peace of mind to the consumer, that the consumer is safe.
Yeah, and it's interesting how that happens, isn't it? Because in the case of Aave or whatever, it gives out flash loans. So these are loans that only take place if they are repaid in the same transaction that withdraws them, right? So in a way, there's very little risk there. But a product like that just doesn't exist in the conventional finance space, right? Nobody's going to give you a collateral-free bridging loan to go and conduct some experiment. And if it pays off, they're happy to say that they made you the loan. And if it doesn't, then maybe the loan never happened at all. It is a bit of a weird world, isn't it? I mean, I suppose one of the easiest assets that are out there to tokenize would be something like, fiat currency, dollars, pounds, euros, and so on. These so-called stable coins, right, which are backed by very common real-world assets. I mean, what is the regulatory landscape around the world looking like for assets like stable coins? And what can we expect? And do we expect more governments to be looking at central bank distributed currencies as well? Then again, maybe you live in the US. Can you tell us what's going on over there?
So there are regulations coming. I spent the last 2 days in Capitol Hill talking to 12 members of Congress there. They all have their different take on, depending on what their kind of viewpoint is. But certainly things are opening up. I spoke to Rudy Yakam, who's kind of looking at, improper payments and things, and looking at a way of providing transparency through that mechanism. It's all about cost savings, really, in that side of things. The SEC is definitely moving towards a model where it's going to define what an equity is and what surrounding that. And Yeah, so that's interesting. A point on just changing slightly the topic. Back in 2020, we looked at Aave with my research hat on in the University of Notre Dame, or Notre Dame, whatever you want to pronounce it. And we looked at the smart contracts, and we analyzed the data from Aave going round, and we looked at the wallets that were transacting on Aave, and the whole world of decentralized finance is kind of interesting. But in those days, you mentioned 8 billion under assets. That's interesting, and maybe it's moved on. But some of the problems back then, which is 4 or 5 years ago now, is that we studied Aave for a month, and 90% of the transactions came from 10 wallets.
Actually, it's $28 billion now. Actually, I was just checking right now.
So maybe also, yeah, go ahead.
Yeah. Also, the thing with the stable coins, I mean, there are two types. There are like regulated stable coins, for example, CBDC, or no, actually, yeah, sorry, USDC. Sorry, actually, that's one of the biggest ones. So that's like, which means it's like a clear regulation. Okay, it's actually legal. So someone using it kind of like a peace of mind. Okay, this is like illegal, but also that means like they can do remote law enforcement. That's of course it's like, even if someone in some other country outside of America uses, for example, USDC, then if they say, oh, we don't like what you do, they can actually confiscate someone's dollar coins, even though they're not in the US. And there are decentralized stable coins. I just checked. There's like seems to be $220 billion in stable coins, and in fact, that's actually one of the killer apps, like one of the most like of the blockchain, really, like that people want stable coins. They want to have a cheap way to transfer money around the world in a way like that eliminates risk. Basically, like, okay, I'm sending money. I want my money to arrive. I don't want no speculation, no trading, nothing. Just like no volatility. I just want it to arrive like efficiently from one continent to another. So it's such an obvious thing. So that's like this huge demand for stable coins, and also stable coins. I mean, they are like the backbone of the financial applications on the blockchain. They're like, without them, like they wouldn't really be possible, many of them. And yeah, they can allow like the transfer of assets. But yeah, and then there are these decentralized stable coins, but that actually can be moved around across any legal system, and actually they don't actually are not kind of kind of like, they're not kind of confined to a specific legal system.
Yeah, really interesting. I mean, this is actually an interesting question just come into the Q&A, and if you do have a question, please do add to the Q&A. It comes from Ahmed, and he asks, I'm curious about how you see cryptocurrency fitting into the broader financial system, especially across jurisdictions, right? Given the decentralized nature of blockchain, who is going to ultimately own or govern the ledger, right? And do we need, an international regulatory body to ensure that everything is accurate and consistent? I mean, I suppose the same kind of institutions we have on the internet, right? To, for example, govern naming services and so on. Do you think there's a need for something like that, but in the blockchain space?
I think the Web3 community answer to that would be no. It governs itself, and that is an opportunity and a problem, because if it's governing itself, like going back to the stable coin example, 2 stable coins derailed 2 years ago, and all of those assets went to zero. So issues with the programming of the smart contracts it remains to be an issue with that kind of system. So yeah, I don't know if internet. I think the closest thing in Web3 space to a governing body is the Ethereum Alliance. That would be the only thing there. But in a sense, if you try and regulate that, then you're defeating the purpose of what it's trying to do, being decentralized. So a DAO, for example, would be kind of the regulatory body that Web3 would think about.
Yeah, that's not to say that you can't construct decentralized applications that interface with regulatory bodies, right?
Exactly, yeah. I mean, that's I think I mean, and moving like following that thread of thought, I mean, it's like basically you have like cryptocurrencies. To me, cryptocurrencies is it's just another. I mean, I don't know how do you define it. Like, let's not worry about what kind of asset, but it's an asset. And you know, markets 101. I mean, we like to. I mean, and it doesn't necessarily. We like to create market structures around these assets, and we, you know, people trade them, people keep them, and they become, you know, sometimes in the earlier days, they don't really have proper marketplaces. Then it evolves. I mean, you create the entire market structure around it. In this case, there is a market structure in, you know, like across the board, right? And now, I mean, we are. To me, it's. I mean, it's no doubt that cryptocurrencies will be around, and they will be part of the next generation financial services. Without any, you know, opinion about, you know, what is the nature of the product and so forth. In terms of the protocols that they are governed, I mean, they live on. Again, I think that's the kind. I mean, I see it as more of a, you know, the engine that they create them, and then there's asset and the protocol. So to me, the people who trade these or financial services, which services these assets, are already. I mean, there are, of course, adjustments you do to the regulation and the systems, but from one perspective, it's just like any other asset, if you think about it.
Yeah, I mean,
can I add?
Yeah, go on.
So actually, many protocols and some digital currencies actually are governed by DAOs. So they are governed, but they're just governed in a different way. So DAO is decentralized autonomous organization. And in fact, it is a highly formalized way of governance, but it just doesn't, it's not confined to one legal system, but it's highly formalized and predictable and in a way fair, because like participants from around the world can basically they have a formal procedure. Like, here's our like software that runs our project, our protocol, and if we want to make changes, we have to like give a proposal to this DAO to vote, and then people vote on it. So in a way, and I guess the AVA that we mentioned as well actually have a very highly formalized like governance structure, even though it doesn't, even though it's not like regulated in the normal sense. So I guess like there's like a way to create order and predictability in governance, even for those things that do not live in the nation state.
Ian, do you want to say something about?
Actually, I was just going to talk about kind of cryptocurrency. Just back to that topic. So, one of the, you know, back in the heyday of, I guess, tokenization, 2017-18, I think one of the problems I had at the time of using cryptocurrency for, you know, rewards, which, you know, it's used across the board in DeepIn and everything else, for that reason, is the volatility of the price. Now, how do you build a realistic business model on an ever-changing price? And you don't know, and that price is not affected just by what you're doing as a business, it's affected by the community and speculation. So I think that's one of the issues. It's interesting that Trump announced yesterday that he's building a crypto reserve for multiple cryptocurrencies. I guess that's a gamble in terms of you know, those currencies going up. But you know, it's very difficult to understand kind of where it's going. Obviously, Bitcoin was nothing even 5 years ago, and now it's almost $100,000. So you know, what that looks like in 5 years, I personally have no idea, and I don't know that, you know, and speculations around where any of these cryptocurrencies are in 5 years' time, you know, vary vastly depending on who you ask. So
it's certainly very fascinating to think about how the use case for Bitcoin has kind of evolved, hasn't it? Because I think it was conceived as a kind of a cash alternative, and at some point people said, well, Bitcoin is behaving very much like a high-tech stock, and then people are starting to talk about it as a commodity, as sort of being the digital version of gold and so on, because it has a finite supply and so on. And it certainly will be very interesting if nation states decide now they need reserves of cryptocurrency alongside their gold reserves, right? I mean, one of the things that we did was build this gold and crypto asset index, which combines gold and crypto assets, and then kind of rebalances these every month. And it certainly is an interesting way of getting an investment that has a much better risk profile than either just like crypto or gold alone, right? Your alternative, of course, is just to use a stable coin as your asset, and then you have no volatility, at least not in terms of the unit of the the stable coin, right? So it's kind of it's really very interesting. Just one thing somebody dropped in there was the in that conversation was the word decentralized physical infrastructure, right? So it's one thing to tokenize a unit of cryptocurrency. It's also interesting to think about if you can somehow put, say, the nodes of like a mobile phone network or something like that onto the blockchain and create a new kind of decentralized service, right? I think we're just at the beginning of seeing where decentralized physical infrastructure is going to take us, but it's certainly some of the more interesting applications that I've seen. I mean, for example, there's the Helium network, which started off as an alternative to GPS, as kind of like a location sort of network, and then latterly it's moved into becoming a mobile network operator. Yeah, so the nodes on the network then actually form a proper 5G or 6G mobile phone network. That's the vision. Anyway, whether it works very well in practice, I don't know, but it is interesting to think about how some of these future systems might be kind of made up and constructed, and who's actually going to deliver the relevant service, right? Maybe it's not going to be some of the traditional operators. Maybe you and I will be running the nodes of the stock exchange or whatever it happens to be, right? And I don't know what the limit of that is. Yeah, just a comment on the Q&A here. Ahmed says he likes the reference to gold reserve, which highlights the importance of cryptocurrency in terms of scarcity. Yeah, absolutely. If you want to know more about that, I'll put a link in the chat so you can go and have a look at the index. There are also some papers online about it's the CoinShares Gold and Crypto Currency Index, if you're interested in that. So yes, thank you very much for the questions. Do keep them coming in. Does anybody else, maybe from the audience, want to pose a question to our panel?
Maybe in the meantime, Will, I mean, your point about running the nodes of the stock exchange is already happening, actually.
Oh, right. So is there a project like this?
No, it's just basically it's not the London Stock Exchange necessarily, but these are marketplaces, and people are running the node of these on these decentralized marketplaces. So to me, like it is not, again, like let's think about the bigger picture, a combined all-encompassing future of financial services. So, and it's already, I mean, why wouldn't, for example, London Stock Exchange or someone like that in the future start creating these kind of networks? And because then they already exist, they may even start working with one of them. I have no idea, I'm just speculating, but technically it is happening. And the same goes for the DePIN, decentralized physical infrastructures. As far as I'm concerned, it's the same, decentralized platform economy, like with the incentives aligned, governance automated, transparent, ownership structures are all tracked. So we're really looking into a new paradigm in platform economy even. Yeah.
Yeah, excellent. So another question has come in. Alexander is actually bringing up a key point. I don't think we've dealt with it yet. It's around digital identity, right? And how do we do this properly on a on a blockchain, especially if we're trying to integrate with, standard know your customer and anti-money laundering and counter-terrorist financing kind of regulation and all the rest of it. So he would be very interested in the panel's view on blockchain-based digital identities. I mean, what's the right way to go about that?
Basically, okay, there's the blockchain, and actually the part which is part of this revolution is actually this identity layer that lives on top of the blockchain called decentralized identity. And yeah, I mean, in our startup, we're going to use this, and actually that allows basically, in fact, when you want to move a application, make it like legal or make it compliant or like kind of you want to like reassure, you want to make it decentralized, but still add some like level of certainty. For example, like one participant just represents one person. Like one person cannot appear 1,000 times with a problem on blockchain. So decentralized identity is a great way to basically add like compliance and like a way to make sure someone can only appear once and like and so, and also to make something which works across in different countries, cultures, legal systems. And for example, decentralized identity has been used, for example, I think it was by JP Morgan, to do like financial transactions, like someone selling a financial instrument to someone else, and then the person selling it in the decentralized identity, they prove I have the right to sell. The buyer shows, okay, I have the right to buy. So it's actually an excellent and necessary thing to make those applications like civilized and legal, and actually combine the benefits of decentralization with the legal frameworks. I think the decentralized identity is what is critical, I would say, to make that possible.
Yeah, I mean, you can be quite very careful about this. And for example, you could use people's iris codes as a proof of their identity, right? As happens in some cryptocurrencies like WorldCoin. I don't know if everybody would be necessarily comfortable with that level of identity. Right.
Can I respond to this?
It certainly gets around the Sybil problem, right, of people pretending to be other people. But maybe it's also a legitimate perspective to say that everybody should be allowed an identity in a particular context, right? So each individual can have multiple personas that they use, say, for professional purposes and so on. I don't know, Maciej, what's your view?
Actually, I just want to comment that I think the WorldCoin isn't, I don't think that's a good example. You should have someone create an identity and forcing you to use a hardware device. I'm not sure this is the best practice. I would say, for example, there's like a company and then they also have an open source standard like called the Privado, and there are many others that you separate the open source standard for the central identity and you have a marketplace for issuers. I just want to comment on that. That's a much better, you don't force someone, you have to use this hardware. I think that's much better.
I think the concept of decentralized identity, if we're talking about DIDs, the W3 spec, that's kind of really interesting because the identity itself couples with a public-private key so you can prove who you are, and the complementary spec to that is verifiable credentials, and credentials are digitally signed documents that are issued to a DID. So in other words, you have identity and then you have a mechanism that other people, third parties, can verify you are who you say you are and you've acted appropriately within a specific context. And that's kind of interesting. The way that works with blockchain is also very interesting because we've built something as a hobby, I guess. we looked at the problem of how people losing their wallets, right? So in the blockchain you have a wallet which also has a public-private key, but if you lose access to the private key, you lose access to all your assets. So we kind of tackled the problem of using DIDs to use a custodial wallet, and it turns out it's not so difficult to do. So the idea there is that you have a DID, so you have an identity. The thing about DIDs, you can rekey the public-private keys, right? So if you're using a DID in this context, what you're relying on is a third party issuing you a credential, and you're using that credential and your DID to access a smart wallet on chain, and you're transacting through that mechanism. So if you lose your private key, you just ask the third party to rekey you, and then you never lose your access to any digital, any digital asset. at all. So there are ways, blockchain coupled with other specifications like DIDs and so forth offer very vast amount of opportunity. And also you can use DIDs and credentials to create a decentralized permissioning layer to data. And we've done that for the US Air Force to bring in data from suppliers into kind of a blockchain environment, that the only way one supplier gives access to another supplier, for example, or somebody else in the ecosystem, is actually issuing a digitally signed document to that identity, such that only that identity, the other person, can use it, and nobody else can prove, can reuse that, because they have to prove that they own the DID using their private key. Anyway, that's getting into the weeds, but yeah.
I think this conversation brings up an important point, which is related to one of the questions we have here, which is all around usability and the barriers of the adoption of this technology to the general public. So Alex in the Q&A said, look, my friends can just about use PayPal, let alone set up and decentralized wallets or write or interface with smart contracts or whatever it happens to be. Right. Also, where's the helpline for the blockchain? Right. The banks, they're centralized. You can call up the help desk and you can say, "Oh no, I sent money just now, but I think it was to a scammer. Can I have it back?" Right. Whereas you absolutely can't do that on a blockchain. So I'm interested to hear about things like your key recovery algorithms and stuff. Because typically, if you lose the assets that you've held in your crypto wallet, you've lost them, right? So presumably this is one of the big challenges that we have to solve going forward.
Does anybody else want to speak to that? I think the notion of customer support is an interesting one. Who do you call when something goes wrong? You don't have any customer support. And I think this is back to Pinar's point earlier, is that, it's not just blockchain, it's other services around that needs to kind of provide humans with human-like things like customer support. Otherwise, people are just not going to feel comfortable using it.
Yeah, so one of the things I discovered the other day is actually when you send a blockchain transaction, you can also, on some networks, you can also send a message with it. So if somebody takes your money, you can kind of have a conversation with the new owner of the cryptocurrency asset, right? And try to get back. It's really interesting. I think we're going to have to wrap it up because I think we're almost out of time. I just wonder if I can ask each of our panelists, maybe if there's one big open challenge you think the blockchain community in the UK needs to get together to address in order to really make more of a practical impact on people's lives, what would it be?
I mean, I'm always and it's all connected to this conversation. I think we should look into very intentionally creating new business models, new ways of doing things using these technologies. What I mean by that is there's just lots of opportunities. It's not just basically putting a blockchain on an old way of doing things and make it more efficient. Really rethinking, and whether it's usability, whether it's creating new investment products, whether it is using blockchain to actually create a decentralized infrastructure and set up a new company and then compete with really large companies which require a lot of capital. So there is a lot of innovation in the business model innovation space that needs to happen, I think. Yeah.
Brilliant, thanks. Maciej and Ian?
Well, I think it's in a way, it's to learn from other countries, because, for example, there are some countries like United Arab Emirates where 30% people only use blockchain or crypto. So yeah, so I guess it's we should have this this awareness. Yeah, it's possible to build a regulated financial service just for the UK, or you have the alternative to make a financial innovation that can be used by those 400 million blockchain users around the world, and in fact humans or even AI bots, actually, by the way, so which also are users are users of blockchain-based financial products. So I guess and then with that should come an awareness that many of these decentralized products actually they can grow. They have the potential to create wealth maybe 10 times faster than a local product. So basically, it's like a exponential way to create value, I would say, for both humanities and those that participate in the project.
Yeah, that's a very interesting perspective. As long as you don't get in trouble with the various jurisdictions that you then encompass, right? Absolutely. Ian, final thoughts from you?
Yeah, I think kind of the notion of assets, digital assets, I think there needs to be a stronger linkage and a standardization perhaps, or some kind of effort around binding that to physical things or data things. So, you know, there's a term called phygital, which is, you know, mixing the physical and the digital. You know, an asset is an asset. But if you can relate that back to the source, like think about sustainability, think about going back to the source, which is the parameters surrounding the coffee, for example, the humidity, the weight, all of these physical attributes. If you can kind of bind the physical world with assets, I think, you know, the kind of blockchain space becomes much more relevant to the world problems and solutions to those problems.
No, absolutely. And that's been such a big challenge, right? How do you prove that your blockchain record, which shows you that you own that particular diamond or whatever, actually corresponds to that particular real world diamond, right? That is absolutely a major challenge, right? So thank you very much to all of our panel. As I mentioned, we are having another event at Imperial College on Wednesday, the 26th of March, which is going to have a look at combinations of emerging technologies and what they mean. So we'll be looking at AI and blockchain, but we'll also look at blockchain and quantum and AI and quantum and so on. It's going to be an absolutely fascinating event. Please do look at the UKFin website under the events and sign up for that if that's something you're interested in. And more broadly, if you're interested in knowing more about the UKFin network and joining our mailing lists or contacting us, here's all the information you need to know. So it just remains for me to say thank you to all of our panelists. It's been a great discussion. Really enjoyed it. Thank you to all of the audience who asked such interesting questions. Yeah. And hopefully we'll see many of you again on the 26th. Thanks, everyone.
Thank you. All right.